The PBO, Yves Giroux, joins us now to talk a little bit more about the fiscal story. Nice to see you. Thanks for your time as always.
A pleasure.
And I guess, as I alluded to, when you made this announcement recently, it is the cooling effect from higher interest rates that does play some of the role in this larger fiscal deficit that we're looking at right now.
It is, and it's also an increase in interest rates that we have all seen. That's increasing the cost of servicing the increasing federal debt. So debt servicing costs have gone up significantly over the last couple of years and will continue to go up until there's a return to more or lower interest rates when the Bank of Canada starts lowering these rates again. Expected to start happening sometime in 2024, probably after the first quarter. So as we see a small, humble, slow decline in interest rates, debt servicing costs at the federal level should continue to increase because the deficit will add to the debt, but at a lower pace than what we have seen recently. And of course, economic, sorry, go ahead.
No, sorry, finish your thought, I apologize.
And of course, as we see an economic slowdown, the increase in federal revenues will not be at the same pace as we have seen recently.
We talk a lot about where the economy lands, what kind of economic picture we're going to look at. Are you able to project, if you're seeing what they might call a so-called soft landing or a mild recession or a deeper recession? Are you able to quantify in all of these economic scenarios how the fiscal picture ultimately plays out?
Well, based on what we have seen so far, our most likely scenario calls for a so-called soft landing. So we project growth to decrease. Well, it's decreased significantly already. So compared to 2022, in 2023, it should be overall, as for the year as a whole, it should be economic growth of 1.2%, decreasing to 0.7% for the whole of 2024, with economic stagnation this quarter and for the first half probably of 2024. So probably what one would call a soft landing, which is the most likely scenario. It doesn't mean that the technical recession is completely out of the question. It's still possible, especially if consumers and businesses react more strongly than anticipated to the increase in interest rates. Well, and that will have an impact on the federal finances.
Staying on that subject, sometimes you hear economists talk about a situation where you've got stagflation, where things are cooling down, but the inflationary pressures persist. Obviously, many people know that right now inflation is not at the levels that typically a central bank like ours would like to see, their target levels. And I mentioned the fact that the Bank of Canada governor himself had mentioned to lawmakers that there are inflationary ramifications that can come from spending. Are you able to quantify that, how much inflationary pressure comes from whatever the spending bill in Ottawa ends up looking like?
It's very difficult to quantify that for two reasons. One, what's the counterfactual? So what do you assess this against? What is normal spending these days? That's difficult to assess. And two, there's a lot of promises that have yet to be fulfilled. Not necessarily a lot of promises, but a few expensive promises. If one thinks about a national pharma care program, that would add significantly to federal spending. There's discussions about finding $4 billion in savings at the federal level. But whether that will be pure savings or whether that will be recycled through higher spending in other areas is still a question that has no answer. So whenever the minister tables her finance or her fall update, we'll have more answers to whether or not the federal spending is adding to the inflation, but it's difficult to quantify the extent to which federal spending adds to the inflation, the overall headline numbers.
And I guess another complicating factor is when there's already a lot of spending and then there's other considerations that come onto the table. Every day we're watching some of the geopolitical headlines right now. That's something else that has to get navigated.
Totally. But so far, what we are anticipating is a return to inflation numbers that are more familiar to Canadians, around 2%, especially in the second half of 2024. that means prices will continue to increase, but at a lower pace than what we have seen. And that may be why people are confusing stagflation with inflation returning to its normal level. Some people are expecting that inflation returning to what we are used to means prices returning to what they were before the bout of inflation we saw. And there's a big difference between price levels and the rhythm at which prices increase.
Just a final question as we await the economic and fiscal outlook. The question of what we can afford obviously comes up anytime we're seeing budget planning, and especially when we're running deficits as we are right now. You highlighted the higher interest rate reality, which means much higher servicing costs for debt for the government itself. If the picture plays out the way the PBO now sees it, is that something that Canada can afford, or can we afford this kind of deficit picture longer term?
Well, it's something that has to be defined as what you mean by affordability, and we've defined it as a debt to GDP ratio that doesn't increase forever. So you look at a snapshot now, and you look at what the status quo policies would lead to in terms of debt to GDP ratio, in 75 years. And if you end the period at a level that is at or below the current debt to GDP ratio, finances are affordable. So in that perspective, yes, federal finances are affordable in the current status quo policies, but status quo policies by definition don't stay like that, because politicians get elected to implement their policy statements, their platforms. So whether current policies are affordable, yes, they are, but it doesn't mean that the government can do whatever it wants without jeopardizing that sustainability in the very long term.
All right.